Things happening in these markets? Did we hit a major top yesterday?
Major top yesterday? No, not at all.
Okay, good.
I love the hand wringing that we're seeing right now out there. And everybody's all nervous and jerky about this marketplace. But there was a very important, if you listen to Jerome Powell's press conference yesterday, and then you're aware of basically what he's going to be doing for the next 10 years. And they introduced two new tools that they're using within the Fed. One is QE4, and they're admitting it, QE4. And the other is the ability to broadcast what they're going to be doing down the road. So we're looking at 0.25 interest rates for possibly the next 2 years. But what that does is that gives certainty to the marketplace, to the economy, that the Fed is going to be doing what, that they're not going to deviate off their path. There's not going to be any surprises going forward here. I wanted to, I don't know if you can see the slide that I have up there.
Yes, yeah,
now.
we've got them posted. Sure, you're up to date. You're in good shape.
Guy up there?
Yes, it looks just like Tom Cruise. Is that you? Wow,
that's me. That is me.
The difference between you and me is I don't get close to a camera, my friend. So, all right, go ahead, Bill.
One of the things that we have, despite what you're hearing or despite what you've heard, nothing has changed so far. Truly, nothing has changed so far. The Fed is still flooding the market with liquidity, and we are still in a bull market. And I want to make that point that with the Fed now, it's damn the torpedoes and full speed ahead. But one of the things that Chairman Powell said yesterday when he was asked by Michael McKee from Bloomberg, where Michael McKee asked, do you feel a possible bubble is growing that could pop and set back the recovery significantly, in reference to the stock market? And Powell said simply, we are not looking to achieve a particular level of any asset price. What we want is investors to be pricing in risk. So it's up to us to determine how far up the market can go. And where are the retracements that we're going to make in the market? That's what Powell is up to. He's going to keep flooding the market. But what he also said, we're supposed to be pursuing maximum employment and stable prices, and that's what we are pursuing. And that's when I say, damn the torpedoes and full speed ahead, because there's another $2 trillion that has to go into the market. Now, this is the chart that I showed you when I was last on May 8th. We had $6 trillion that had been pumped into the market. They pulled out the playbook from 2008 in order to revive the economy from the financial collapse in the mortgage markets. And today, we're up to $7 trillion. There's $2 trillion more to go. But as you can see, the pacing of that money has begun to slow. So quite naturally, you're going to get a pullback in the marketplace. But on the SPX weekly chart, from 2009 to where we are today, we're still in that upward channel. It has an upward bias. Yeah, we stepped out of it and we stepped right back in, and we stepped above the median line. Go collect some money there.
Yes, we got to hit the cash register. Stay with us, Bill. We'll be right back. Bill Chapman, Trend Reaction, folks. 877-927-6648. Okay, we're back, folks. We're talking with Bill Chapman, Trend Reaction. Bill, we have a question from one of our listeners. What is your average risk when you're trading the E-mini S&P?
I do it on a point basis. So what I'm looking at is the 3 to 4 previous bars and setting up my stop in as an average, as a median within those stops.
But so it changes on volatility.
it changes on volatility. But what I wanted to get back to, if you're looking at the SPX weekly chart that I have posted there, we have up in the far right-hand corner, you can see we're still within the channel, so we're still within a bull market, and it's until we deviate out of this channel significantly that we've entered a bear market. 29.38 is the low that I am anticipating in the near term, and what I have is and I've shown this before, the SPX full moon and 93 days cycle. What we're into is day 60 of the cycle, and it's within those 60-day cycles, as you can see, 62, 63, 61, 60, that you normally get a correction. So this isn't unusual. But the other thing that's going on here is that next week, and this is the WD Gann chart that I run, and we've gotten a bit ahead of ourselves. But if we're running up this line, we should remain within this quadrant going forward. Maybe coming down, to the 29.28 level, back to this area of support right in here, and moving forward, 3,411 to 3439 is my objective before this is all said and done. And what I wanted to show was that the 2020 graphic ephemeris and what's going on here astrologically from a geocentric, from looking from the Earth out into space. And this gets rather confusing, I know, but there's one thing that's happening. We're here in June, okay? And the one thing that's happening in June is that Pluto is squaring Eris, and Eris is one of the exoplanets. I think there's 10 of them, exoplanets that cross through our universe. And Eris was the one planet that knocked Pluto out of being called a planet because Eris is bigger, but it has a 252-year revolution around the sun. But when you have Pluto, the planet of truth, the lord of the underworld, crossing Eris, the goddess of war, Mars's sister, a lot of truths come out. So, for example, the last time this happened was here in January, and what was revealed? COVID-19. We're in June now, and we've entered this phase, and we should be experiencing a downtrend because we're going to hear some truths, and we're not going to like them. We're just not going to like what we're going to hear. And it happens within society and within the market. They usually balance off each other. Bad news in society is good for the market. Bad news in the market is good for, is usually good news in society. But we want to keep an eyeball on Jupiter here, the planet of wealth. Jupiter is rising from the low that we saw, and this is the S&P on top of this. And you can see where we had this area here with Pluto below Aries and the downturn in the market and slowly coming back. But it doesn't surprise me right now that we're looking at a correction. Next week is a hot week, okay? We've got Mercury going retrograde on the 18th. I have 3 pay attention days happening in that week, the 15th, 17th, and 19th, and I started to call it a pay attention week. It's a yellow week. There's going to be a lot of volatility. There's going to be a lot of news out, and they've got to settle up the expiry, which started yesterday, by the way. Having been a general principal in options, we would set up the trades. We would get ready on the Wednesday prior to the expiry in order to handle the expiration. But as we go through the expiry, things have been extended here. We're 15 days above my moving average, and that's stretched. That is really stretched. Once you get beyond 12 days above my moving average, you're in hot territory. The And if you're thinking along the lines that, yeah, this is all bullshit. Sorry.
No, that's okay. We've just been banned forever, but go ahead.
I want you to remember one thing, okay? Because we're going to a Mercury retrograde on the 18th. Don't enter any contracts. Don't try to build anything. Don't get married. Stay at, just don't get into any commitments, okay? This is a wonderful swimming pool that I built last year, or 2018. The form was poured on the 2nd of November of 2018, and that was the day that Mercury went stationary before it went retrograde. And just, had one season of the pool, and we had to rename it because it's now Fallujah. If you don't think this astrology stuff is real, okay, you're making a mistake. Because now I have to have this thing torn out completely and have it rebuilt. Wow. And unfortunately, I'm going into a Mercury retrograde when they want to rebuild it.
Oh, dear.
So
make it a fish pond.
So we started calling it Fallujah.
Wow, that makes good sense.
So, but what you're going to be seeing here is as we come through this phase, and as the planet of wealth, Jupiter, begins to descend, we're going to have, we're going right into a summer rally. And you're going to see, as it rolls over in August, September, we're looking at a decline in the marketplace through October, November, and December, down to test these lows. Because the earnings are going to start to come out. What the next phase in this economic cycle and in this recession, and I was saying we were in a recession back in December because on the street that I work on, we had 3 pizzerias that went out of business. How does a pizzeria go out of business?
No business.
No business. And well, what do you got? You got yourself in the underpinnings of a recession. And it was made official in February. They said it started in February. It was made official earlier this week. But as the numbers come in and earnings come in, what the next phase we're going to go through is a downsizing in this economy. That's going to become, the catchphrase. Downsizing here, downsizing there.
Got to pay some bills. Can you stay with us till the break?
Yeah, I can.
You'll be right back, folks. Bill Chapman will be right back. Okay, we're back, folks. We're still talking with Bill Chapman. Bill, you want to tell the folks how they can reach you and what services you offer?
Oh, my goodness. Well,
this is commercial time.
This is commercial time. I run a website called TrendReaction.com. And on TrendReaction.com, you get the opportunity. It's designed for the active trader, the active day trader in the futures market, especially if you're trading the ES, the E-minis. Let me get this over here. And I do a daily forecast. Every day, a report is delivered into your mailbox an hour before the open. And what I have within is a brief. I have commentary in the beginning. I put up an anticipated market profile. There's information for traders versed in technical analysis, the economic announcements. But more importantly, I have the times within plus or minus 5 minutes when you should be paying attention to the market. I also supply the high, low, close, second and third resistance and support. But when you see these reports come out, and just by the profile alone and the end of day, how many times have you ever seen anybody call the turning points in the market? Now, these aren't pivot times. These are pay attention times. These are the times you want to be at your console trading and be ready for it. So, the 11 o'clock here, the low in the market, the 1250, the break to the upside, the 1340, low tide, right up into 1455 as the flood started to occur. There's a great one. There's a great one in here. This is Fed Day on the Fed announcement.
Hey, Bill, we have a commercial. We'll have you on again soon. Thanks for joining us. We put your information there, so if people want to reach you, TrendReaction. Bill Chapman, thank you so much for joining us today, my friend.